right, and I think we are officially live. All right.
Let's go.
All right. So we just gonna get some people time to get on here, but in the meantime, I think let me just click on here and make sure everything is good on my end.
All good.
Click on here. Didn't want to do that, but let me see what's gonna happen. Yeah, that's that code. Let me turn that off. All right, everyone. So thanks for joining us right now. I have a special guest, Tony. I'm not going to even try to pronounce your last name, but can you tell your last name for the
Tony
people out there?
Samino. Tony Samino from Rock
Okay,
Finance.
okay, perfect. So yeah, we want to discuss with you guys on how you can receive funding for your small business. I know there's a lot of information out there. So today on this live, on this YouTube, we want to clear some things up as far as what it takes to get funding and how you can receive funding for your new LLC, for your established LLC, for your small business. A lot of you guys, you have great ideas, but you lack funding. That's a big problem in the industry, whatever industry you're in, from trucking to real estate to some of you guys are selling shirts. Some of you guys are in, I have a mentee who's in the ice cream industry. So you guys have a lot of great ideas, but the number one thing that's preventing you from not only starting, but growing and scaling your business is funding. So the question becomes, how can we help you guys out to get funding for your small business? If you have any questions, put them in the comments. Anything you're looking to get for your business. Again, I got like multiple screens. So if I'm looking over here, because I'm looking at your comments too as well. So yeah, I kind of want to just jump right into it, man. I'm excited. I'm really excited.
I'm all about it. I love that we just went live right away because it doesn't give us much time to prepare, and I would rather that, honestly. You hit the nail on the head. I'm hoping that we can bust some myths around funding, because I think that's really, you hit the nail on the head with saying, there's a lot of information out there, but there's also a lot of misinformation, people call it marketing, right? I don't know if I'd agree with that strategy. But I think if you spread factual information, people can make well-informed decisions. And that's what business owners do best. They make great decisions. That's what they've done to get to the place that they're in. So, I'm hoping to share some cool insights today. You hit the nail on the head on some real rock star industries, and really kind of the backbone of our country are the small business owners. Like you said, trucking, transportation, people in consulting, people in retail, wholesale and distribution, manufacturing, auto repair. These are the industries that kind of keep things going. And this is our core customer at Rock Financial. So I think that that's what we bring is a unique perspective on the market, but also just being able to give you some insights into the real deal as to what business owners are getting today, so that you could take advantage of what's available. Just to give you a little bit of overview about us so that you have some idea about our background. We help business owners get access to funding in the alternative finance space. What that means is we're outside of your traditional Chase, Wells Fargo, Bank of America's of the world. When you think of them, they're traditional financing. They have traditional requirements that you have to meet. You need at least a 680, possibly 700, 720 plus credit score. Usually you need 3 years time in business, because you need to show them 2 to 3 profitable tax returns. They'd love for you to own a building, at least some equipment for your business. But not everybody is that, right? In fact, a lot of people aren't. A lot of people are on their way to that. And that's where we help. We help kind of around what the banks do. So banks, they like to lend for real estate. We lend for what we call working capital. So if you need inventory, or you're purchasing equipment, or you're hiring employees, or you're facing a challenge in your business, you got a cash flow crunch. People haven't paid as quickly as they once were because, the economy's not where it once was. We deal with these types of business owners, regardless of your credit profile or the industry that you're in. We have no minimum credit score and no industry restrictions. So it doesn't matter what you do or how you do it. We help you understand what funding is available.
So
and we go ahead. I'm sorry.
no, really quick, Tony, because I just want to slow it down for the people who want to have a deep understanding as far as what really separates you from traditional banks such as Chase. Because I get a lot of people, hey, you know what, London? I went to Chase Bank and I applied for a loan, and the manager told me, or the relationship manager told me, hey, you know what? I need to be in business 2 years. I need collateral. I need tax returns, right? I need all these financial statements or documents. I need a 700 credit score. So are you saying you guys are different from going the traditional route that someone like a Chase or a Bank of America, new LLCs, or they can still get qualified for funding if they don't have collateral where they have to put up assets such as real estate, as you mentioned, maybe they boat or a piece of art, some things of that nature. That's what separates you guys from other traditional funding.
Yeah. So what's great about the age that we live in is there is funding available, right? But it's just understanding what kind of funding can you use. So there's a lot of different kinds of businesses out there. Just to give you a little bit more insight on us, Rock is a broker. So we work with over 75 different banks and lenders, and we offer their products and services to you as a business owner, right? So we're not everything to everyone. We just know what everybody's doing, and we've been working with them for a really long time. So we know how to help you gain access to those programs, and that's what we do best. We have, if I was to sit down with a business owner today and say, hey, we're going to go and look at getting you funding in your particular scenario, my very first question for them is, what are you using the money for? And that right there is going to tell me a lot about what kind of money they can gain access to, believe it or not, because there's a lot of different kinds of programs out there, right? If we're talking about, that business before, like I was saying, that might be in a cash flow crunch, right? Well, maybe there's a line of credit or a accounts receivable financing because you have some people that owe you some money. They just haven't paid you yet, right? You can fund those accounts receivable. So there's different options that are available depending on what you're doing. I mean, if you're buying equipment, there is equipment financing, but you can also get cash to buy equipment, right? So like you can be flexible and kind of stick and move, for lack of a better term, into what might be best for your business. So what I would say is, first things first, look at what you're using the money for. Then the second thing is understand what stage your business is in. And I'm going to give you a little bit of guidelines into alternative finance, kind of outside the bank, right? Because if you go to Chase or Wells Fargo, like we were talking about, and you have under 3 years time in business, or you can't get them tax returns, or you don't have collateral, they're going to call you a startup, right? That's what they're going to tell you. They're going to say you're a startup business. That's not a startup.
And immediately deny you, turn you around.
Correct. And they're not going to be able to help you till you go above that term startup, according to whatever requirement it is that they make you jump over at that point. But for us, that term startup is completely different, right? So a startup in alternative finance is simply somebody that has yet to make revenue in a business checking account. Right. So once you've established that you have a business checking account and you're making money into that checking account, especially if it's been 3-6 months where you have a track record of using a business checking account, well, now you can gain access to business funding. And that means, and by that, I mean cash in your hand today for your business. And the options are wide there. There's lines of credit, there are term loan options, there's cash advances, and there's a lot of different styles of funding that you could potentially gain access to. Where things are even more different is if you don't make money in a business checking account just yet, right? So that would be like a true startup in terms of debt financing and what's available today, right? So if you
real quick, Tony, let me stop you really quick. But I want you guys to really understand what Tony just said. So if you go on the traditional route, most lenders, most creditors, if you go to Chase Bank or America, if they consider you a brand new business on paper, if you 2 years or under, right, on paper, whether you properly structure your business checking account. But if you go the alternative route, this is why I stress properly structuring your business really important. Hence, having a business checking account. That's one of the most important things that you need as far as to make sure that you're an established business. So if you have a business checking account and you show deposits for a certain amount of time, let's say 3 months, 6 months, you can qualify for funding. So you don't have to be in business for 2 years when you take the alternative route. Is that correct? Is that what you're saying?
100%. And what's unique about it, right, is, at that 3-month mark, you're going to have a certain amount of options. At at 6 months, you're going to have more options, 8 months, more options, 12 months, more options. That's just how the marketplace works today. They'll give you money in as little as, just a few months time in business. And by time in business, like we were just saying, we mean having that business checking account and using that business checking account. And the reason is because think about it from a bank's perspective. You want them to give you a business loan, but they're not going to fund it to a business checking account. Like, that's the way that banks and lenders think about it. Is if I'm going to give you a business loan, it's going to go to your business account. It's not going to go to a personal account. It's not going to go to a money market account. So you need that business checking account to get business funding. The one time that that's not true, though, is with equipment financing. And this is why equipment financing is so unique. If you do have, let's say, you want to get started in trucking, or you're starting a restaurant, or you want to, build a food truck, right? You can potentially gain access to equipment financing to buy that equipment. And what's unique about equipment financing is it works like kind of like buying a car, right? Because that equipment is technically an asset in the business. You can access specific funding for that will look at true startups. And it is a little bit more credit driven. So you want to be at least like at least a 600 plus, I would even say like 640 plus credit score. And you might need a little bit of down payment, right? You might need 10 or 20% down, depending on it, right? It is a business transaction. They are still going to view it as a business transaction. So, if you might be able to put 5% down or 3% down on the personal side, on the business side, it's like 10 or 15 or 20. And that's pretty common. There are programs that will finance 100%. I'm not going to say there's not, but I just want everybody to be prepared for what might come, should you actually go down that route. But there are a lot of options available today. It's just about, again, knowing what am I doing with the money so that I can access the right type of funding.
Right. So, Tony, who would need, in your experience, who would need equipment financing? So we just stick to equipment financing because some people don't know what equipment financing is. They don't know the qualifications. So in your experience, what entrepreneur would need equipment financing, and how would they get qualified for equipment financing?
Well,
if you was to break that down.
Yeah. Let me just say this first of all, though, London. Like, I don't want anybody to feel like they don't know this and that's like a problem, right? Certainly not. I spent way too long getting my degree in finance, and I didn't even know a lot of this stuff existed when I graduated from college. So, like, I and a lot of money. So, like,
right.
all good, right?
So,
you got to be in the real world to know it. And to be honest, that's why Rock Financial exists. We exist so that whatever information you need, we can get for you based on all of the business that we've seen and the businesses that we help. So when we're talking about that equipment financing, a really quick definition of equipment financing or equipment within your business is any equipment that is essential to your business. So if I'm being honest, this microphone, these headphones, the lights, the LEDs, this desk, the cameras that we're using, are all technically business essential equipment. Any of the trucks, trailers, yellow iron construction equipment, like that's the stuff that people usually think of that comes to mind when you think of like equipment financing, right? Is trucks, trailers, maybe like an excavator or something like that. But you would be surprised. It's literally everything from office chairs and furniture. If you're a restaurant, every piece of freezer and refrigeration, as well as any glass casing, tables and chairs, your POS systems. If you're in a retail store, let's say you have shelves, all of that stuff, it's all essential equipment to your business, right? You would actually know best, based on your type of business, what equipment would be essential. But, one that just sticks out to me is like a vehicle in your business, right? Like if you're somebody that needs to get from point A to point B, there's a lot of businesses that take advantage of purchasing a vehicle through the business name so that they can use it for business purposes. They usually put a logo on the side of it, or maybe they're, a QR code with access to their social media or something like that. But it's just another form of marketing that you're also paying for through equipment financing and leveraging something that's getting you access to that vehicle. So, again, it's any equipment that's essential to your business.
Okay, makes sense. Now, when it comes to the equipment loan, we're just gonna stay with equipment really quickly.
Yep.
So if I was to come to you as a brand new business owner, let's say I've been in business for 6 months, and I'm looking to acquire a party bus for my business, right? And I say, hey, Tony, I need this 25 passenger party bus, right? What would you say as far as my qualifications that I would need in order to make this deal get done?
So first things first that you should know about equipment financing is it's usually based on the value of the piece of equipment, right? So the first thing that you're going to be asked is, what piece of equipment exactly, right? So they're going to want like a quote or an invoice for the piece of equipment, something that shows that, hey, this is a real transaction, right? Because we're in the fraud age. So they want to make sure there really is something there. You typically need to be purchasing that from like a vendor, or in this case, maybe a dealer or dealership, right? The other thing that I would say is, again, it's got to be business use, right? So I would make sure that you're like a limo company or some sort of transportation for parties, and not necessarily a landscaping company that's buying this. But that's the other thing, is it has to be for, the right type of business use, right? Like, you couldn't own a landscaping company and go out and purchase a party bus. That would be for the party bus company, so those are the first few things that you would need to know. But then as far as your requirements, being that you are 6 months time in business, the first thing we're going to look at is your bank statements to see, does your business checking account have the ability to afford a payment? And basically, equipment financing is typically like 3 to 5 year terms. So you're looking at 36 to like 60 months on a lot of that stuff.
Really quick, Tony. So when you say afford, how would that look like? So what are some of the things that you guys looking at my statements, my bank statements? Are you looking at deposits? Are you looking at the bank rating number? Like, what are you guys looking at as far as to see if qualify for that equipment loan?
They're gonna do a deep dive into the financial side, right? So they're gonna look at literally everything in the bank statement, because if I'm being honest, banks and underwriters, they check boxes. And they're looking for you to not check a box or check the wrong box. That's it. That's all that they do, right? So they're going to view your application one way. They're going to pull your credit and view it another way. And then when they get to those bank statements, yes, they're going to look at affordability. So things like how much you've deposited into the account, but also how much money you spend in the account. How much money do you hold on a day-to-day basis is also very important, right? So if somebody goes, especially in their business, right? If they're going negative every other day in that business checking account, and they're really volatile in that checking account, they may be declined because they have too many negative days or too many NSFs in that business checking account. But they're looking basically to see, can you afford that payment? So if your payment's $1,000 or $1,500 or $300, whatever it is, you have to have enough money left over after you've spent your money. That's what they're looking at, because you've spent your money and made money, that you can afford that payment month over month.
See, guys, this is what I'll be telling you. Banks only care about two things, essentially: your willingness to pay them back, which is based off your personal and business credit profile, and your ability to pay them back. right? And that's based off your revenue. So what Tony is saying, if you don't have, let's say your credit is not all the way in position, because I'm sure one of the requirements is credit, but it doesn't have to be a 700 above. Is that correct? For to get
So
qualified finance?
what's cool about credit is that's a sliding scale. The longer you're in business, the less they care about it.
Okay.
And especially if the more, not the more money you make, but the more money you hold, right? So we were just talking about those bank balances. If you're somebody that you just keep a decent amount of cash on hand and your business is healthy, you have $5,000-$10,000 a day in your business checking account, you can afford a payment no matter what time of the month it is, right? Some people don't have that, right? So that's what they're looking at. And based on that, it, is going to determine how much they're looking at these other statistics. If I'm being honest, I'm not going to tell you that every bank outweighs affordability over credit, but they all do outweigh it some way, shape, or form, because at the end of the day, what they want to know is that you can afford it. There are some banks that don't even look at personal credit. Some banks and lenders that don't even look at personal credit. They're simply looking at the business, the health of the business, the performance of that checking account, as well as any other, anything else that they might do in their, in their searches, if they're checking business tax returns or, what else is going on the deal. But there's a lot of options. So, I would say credit matters only if you're probably less than 12 months in business.
So they're looking for, would you say, risk, as far as what's the likelihood are you going to pay this loan back? It all comes down to risk.
100%. You hit the nail on the head. It's a risk assessment. That's exactly what they're doing. Banks don't like risk, right? Especially the big ones, right? So if you're at the big banks, they're going to take the least amount of risk. How you can hack that is you find people that specialize in your type of banking that you're looking for, right? There are business banks and commercial banks out there, outside of even what we do. But there's also then like the banks and lenders that we work with, right? That are specialized, that they don't even hold deposits. They simply lend. Right. And that's what's unique about some of these equipment finance and alternative lenders is their whole business model is the lending. Right. So whereas a bank doesn't have to lend money, they just want to hold it. They like to touch it. They like deposits, and that's one thing that you also want to keep in mind is, does this bank or lender lend me the money because that's the way that they do business, or are they lending me the money because it's a favor to me and it's a resource to keeping my deposits here, right? That's what the products are offered at traditional banks are about. They're not really trying to lend the money. Believe it or not, they don't even make money when they lend money. Secret, the only reason banks charge an interest rate is because of what we were just talking about, the risk. There's a certain percentage of loans that will default. That interest rate that you pay is so that banks can write off their default. That's it. The way that banks actually make money is through a lot of times like insurance and investments. So there's a lot of, again, misinformation out there, right? Banks don't actually want to lend you money. They don't make money on that, right? If you default on a mortgage, yes, they get the house and they can sell it and potentially make money there, but they're not in that game. They're in the game of major investments. They want to give $100 million line of credit or $200 million to Apple or Walmart. That's the game that they're trying to be in. Unfortunately, the market for small business or individuals is based around these alternative sources where their whole game is now catering to that market, right? And that's what our banks and lenders do. They specialize in working with that marketplace.
Speaking of that, specializing, can you name some of the resources that you guys specialize in? We talked about equipment financing. But there's any more that sticks out to you as far as what can new business owners, new LLCs get qualified for?
Yeah, absolutely. The top three biggest products for us are always term loans, lines of credit, and equipment financing. So term loans and lines of credit are a little bit like a bank style financing in that you typically need to be in business at least 6 to 12 months versus like that 3 to 6 month mark.
Okay.
But once you've been in business 6 to 12 months, if you do have over a 600 credit score, you could be a client for either a line of credit or a term loan. And what that means is terms are typically a little bit longer, and rates work a little differently. So with a line of credit, why it's such a hot button item is because of the flexibility, right?
Okay.
And I think you get a lot of people talking about this one because of the flexibility in it. But there's also danger in that, right? And what I mean by that is, if you are somebody that is taking the money to go buy a piece of equipment, right?
Yeah.
And you took a line of credit, that line of credit may end up costing you more than your equipment financing. And the reason being is because when you draw on a line of credit, it's intended that you pay it back quickly. And I don't mean, the next day, but the shorter that you pay back your line of credit, the less interest you pay. It works just like a credit card. So if you get $100,000 line of credit, you go out and you put $20,000 on the line, you have a $20,000 balance, you're paying interest on $20,000. They will make you make minimum payments on $20,000. But if you are able to just turn around and pay it all back, principal and interest right away, you're going to pay the least amount of interest possible because it doesn't have a chance to compound. When you get into like these term loan products or equipment financing or even a cash advance, sometimes you get a set cost of capital, and you know that, hey, if it takes me 12 months to pay it back, I'm paying X amount of dollars in interest, and there is no compounding. So you really want to understand why you're using the money. And I'm going to keep saying it.
Yeah.
That's really, really what it comes down to.
Number one problem, right?
Yeah.
Number one thing, strategy, lack of strategy. I ask people that all the time too. What do you need the funds for? Oh, I need this. Okay. Break that down strategically and really figure out, do you need an equipment loan? Do you need a business line of credit? Do you need unsecured business credit cards? Right.
Right.
So that's the thing we have to really understand. What do we need the money for and execute on that? And speaking of that, as far as when it comes to business line of credit, since we was talking about that, are these secure business lines of credit or unsecured business line of credit? Can you explain that for the people?
Absolutely. So we have access to both, actually. So mostly what we see and do, because it's the most flexible, is the unsecured business lines of credit. But we will do some things that are secured by like accounts receivable. We even offer like what they call an equipment line of credit for larger small businesses, right? So if you're somebody that you let's say you own a trucking company, but you have 15 trucks and you want to get to 25, right? We could potentially get you a line of credit so that you could purchase the truck strategically over the next couple of years. And each time you put the trucks onto the line, it would extend new terms for you. There's a lot of flexibility out there. But
so Tony, just really quick, just to be clear, unsecured mean you don't have to put up any collateral. It don't have to be backed by asset, correct?
Correct. So you're not tying it to any asset, the only thing it's technically tied to is cash that you're going to pay it back with. Right. That's really it. They're basing it strictly on cash flow and your ability to pay it back with the cash that you
So
make.
why would the banks allow that? Why would they do something that's unsecured? Isn't that a bigger risk to the banks?
So yes, it is a bigger risk, but that risk comes with a higher cost, right? So that's how banks offset cost, is they just raise the they raise the rates, or they shorten the term. And in this case, it's usually both, right? So if you get a secured line of credit, they might extend you terms that, go out 12, 24, 36 months, maybe even longer, on some of that line of credit for equipment stuff. But if you are simply talking about like an unsecured line of credit, those terms are usually like 6, 12, or 18 months, maybe 24 to 36 here and there. But a lot of times they'll shorten the term or potentially raise the cost. That's how they'll offset the risk themselves. The other thing is different lenders offer the different products. So that, some people like that secured side. Other people will service the unsecured side. And what that means for you as a business owner is it's flexibility, right? For you, you might be saying, well, I want the one that's cheaper. Well, everything comes at a cost. It's an opportunity cost, right? So if you're going to tie up
opportunity costs.
Yeah, if you're going to tie up that asset, now you can't use that asset in the future for lending, right? So that's why
that costing you?
That's why the unsecured is so popular, is because, a business owner knows, and especially the savvy ones, $1,000 here or $1,000 there is not going to make or break them. But where they're dangerous is an extra $50, $100, $150,000 in their pocket, and they'll spend 1,000 or 2,000 to get it. You know what I mean? Even if it's 1,000 or 2,000 a month, you know what I mean? Like that. The one thing I heard one time from somebody that taught me this business was, don't put your brain in their wallet. And it was probably the best piece of advice I ever got. I've seen business owners take, legitimately, we have customers that start out with us, their first loan was $5,000 in the past couple of years, and now they are over $1 million that they've borrowed from us so far this year. They've been able to implement small amounts, grow their business, do what they were trying to do, and leverage this relationship, right? And again, I'm not saying that that's every business that comes to us gets 5,000 first and $1 million second, but no, that's how you develop a relationship. It's crawl, walk, run. And whether your relationship is with a traditional lender or an alternative lender, you're going to crawl, walk, run, and that's what they're going to do for you, whether you like it or not. The one thing I wanted to mention is, I think when people apply for funding, a lot of times it's around what they want. When they take funding, it's about what they need. And that's what I think would be a very good question for a business owner to ask themselves before they actually apply is, okay, I know what I'm trying to do with the money. Now, what do I actually need? Right? Like, what do I actually need to make that happen? Because sometimes we see business owners that come to us and they're like, hey, I want a line of credit. And we're like, why? Because lines of credit are super flexible. Absolutely right. What are you doing with the money? Oh, well, I'm going to purchase equipment, and then I need to hire the employees to run the equipment so that it can make me the money. Perfectly logical thinking. Absolutely. That's super smart of you. However, you're going to spend a lot of money on payments. What do you mean? Well, because they're going to structure an unsecured line of credit on a shorter term. If you finance that equipment with equipment financing, you'll get a longer term, which is access to a cheaper payment, keeping that cash flow in your business so you don't have to spend as much at first. And then maybe, we do take a line of credit alongside your equipment financing, or maybe we use a term loan or a cash advance alongside your equipment financing. But a lot of times people just get caught up in either the line of credit thing, or they're just caught up in what they're doing, that they don't realize that, hey, there might be some other way that I can do this that's more beneficial, right? And that's what we hope to help with is, if you do have a scenario, regardless of whether you're brand new or you've been doing this for a really long time, we can help you with whatever you're looking to do. And that's what our business is built around. We have all the relationships and products necessary to help solve any small business's challenges or opportunities.
So that's one of the major things why you need to know their plan. So once they tell you their plan, you can strategically say, hey, you know what? Yeah, you do need an equipment loan, but you also can use the business line of credit too as well. So based on their plan, you're going to structure around that because everybody is different, correct?
Yeah. Absolutely. You're hitting a home run right there. We literally start at the very, very top of things, and we say, okay, is this a situation where you could potentially be getting like an SBA loan or a bank type of loan? Because those are the cheapest rates. We want to sell you our best products because then you're going to leave me the best reviews. No, I'm just kidding.
I really agree with that. Yeah.
Exactly. You get it. But it's one of those things where, we're here to help you gain access to funding, regardless of what your scenario is. We don't dictate what you qualify for, right? We just show you what you qualify for and then how you can apply it. Some have, I don't want to call them hidden fees, but like some products have larger fees than others, right? Some have less fees than others, right? Another way that you may not be thinking about the cost of your line of credit is sometimes they have a draw fee that's associated with them. So every time you do pull money on the line, it costs you 1% or 2% or whatever that might be, in addition to what you're going to pay on your cost of capital. So all of these things are what you would be thinking, right, if you were a CFO in your business,
Yeah.
right? But most people aren't. Again, I had the conversation before where, like, I went to school for the degree and still had no idea,
Yeah.
So the one thing that I would say is use good resources when you're going to make these decisions. I would always check with, like, my bookkeeper or a tax professional that I'm working with, about my particular scenario, and is there anything that I'm trying to do tax wise, or are there any tax benefits or penalties that I should know about, right? Before I go ahead with this plan, right? If you are going to work with somebody like Rock Financial, I would love that. Make sure you're clicking the link coming through London here. And, I know that that's what we exist for, is to help people like that. There's, just so you know, right? We don't market directly to business owners, right? And there's a lot of people who do. Just to give you an idea of some people that are in alternative finance, Amazon offers a business cash advance to Amazon sellers. Square offers funding to people that utilize Square. Shopify, Amex, Goldman Sachs, Chase has an alternative finance product. So all of these gigantic corporations are in my industry, or our industry here. But the reason that I point that out is because if we were to put together a PPC campaign, those are the people that we're competing against. PayPal and Amex, right? They have very large budgets for things like that.
Yeah.
We have to figure out a different way to do business. We have 12,000 partners that refer us business. Those people are bankers, attorneys, CPAs, people in credit repair and merchant processing. And shout out to people like you, London, that help us, spread the word about who we are and what we do. Because, I believe we're one of financing's best kept secrets. But, with your help, we could spread the word like wildfire. Now, again, it's one of those things where funding is going to change. 6 months from now, we could do this again, and I'll have completely different advice for you. If you don't have the bandwidth to keep up with that, you need a finance person, in your pocket, so that they can help you do that.
So here's the thing, Tony. Here's what I want to ask.
Yep.
I want to transition to credit.
Okay.
Because two problems. Well, based on my experience, it's either new LLCs, new business owners, they're not making any cash in their business, number one, or they don't have the credit. So if we transition to credit, how is it that you guys can finance a new business owner with low or minimum FICO score?
Because it's going to be based on that business, right? So, credit, it's not a factor, but what credit actually affects is your rate and term, right? So if you have a strong credit score, you will get better rates and terms. That's what it comes down to. It's just not going to approve or decline you. Now, if we are talking somebody that's, sub 500, maybe sub 450, that's low. There might be something on that type of credit that would cause us to not be able to help, right? Judgment, a lien, bankruptcy in the past that's too recent, something on the credit that's causing it to be that low, that we might not be able to help for. But again, it's really the rates and terms that are going to be.
Now, Tony, when you say credit, are we referring to consumer credit, or are we referring to business credit, or are we talking about both?
Both. Yeah, they're going to pop the hood on both profiles, just because, especially if you're new or it's a new relationship, they want to know who they're dealing with. There's very few reasons why they wouldn't lend you money, but they are looking for them, right? For example, if you committed a financial crime in the past, they would want to know that, right? Like, they're going to pull your credit and see what comes up. They're going to do a little bit of background search. They're looking to protect their investment, right? But as long as you're looking to do the same thing and protect yours as your business, they're willing to help. And they understand that businesses are cyclical. Businesses aren't like, not that businesses aren't like people, where people can have bad credit and still, rebound from that. But a bad business credit score isn't necessarily like the worst thing in the world. It is and it isn't. It's one of those things like, yeah, it's going to affect your rate and terms. So, if you're somebody that, you're looking for the best rates and terms on the market, well, then, we need to work on those things. If you're somebody that, I always say dollars have to make sense. And what I mean by that is, what are you doing with the money again, right? Is it going to make you money? Okay, it's going to make me money. How much money is it going to make me? Does it make me more money than the money that I'm going to spend on it? Right.
Yeah.
Because if that's the case, then go ahead, do it. If it's going to solve a challenge that's going to help you from losing money, right, or whatever that is, you want to make sure that what you're going to spend is worth the spend. You know what I mean?
Sure.
And as long as that's the case for yourself, again, I would say, hey, let's pop the hood here and see what we can do.
Okay, so if you guys are checking personal and business, how would that affect my consumer credit report? Is that a hard pull, soft pull? Explain to them how that would affect their credit report.
Smart question. Your network's lucky that they got you to actually. Not everybody does, right? Like people assume it's one thing or the other. So when we are doing our initial review, because we will do an initial review of your application before we go out to the market with it, we do a soft pull in-house. And I would tell you that 99.9% of lenders have moved to some form of soft pull because of the fact that credit triggers are one of the most commonly used marketing strategies. So if you are having your credit pulled for business funding, people can buy that information, right? And what started to happen was all the other lenders started to buy each other's credit triggers. So now most lenders do a soft pull of your credit. Now, if you are using some sort of asset, a lot of times upon funding, there might be a hard pull of your credit. So for example, if you're buying a building, if you are purchasing a piece of equipment, sometimes there's a hard pull on your credit at funding. And it's normally only one pull. The one thing I would say is if you're working with Rock and you're going through our process, we would educate you upon that, like about this as we were kind of going through the process with your particular scenario. The other thing is like if we're going for an SBA loan, the SBA does do a hard pull of your credit. Again, we're not going to pull your credit hard, but the SBA
will.
So, if you are going to go directly to a bank, they're going to pull your credit hard, and so is the SBA.
Is it safe to say does it depend on what products and services that you're looking to get qualified for? Depending on, are they going to do a soft pull or a hard pull?
Yeah, so I would say again on that tip, it's also like 90% of products.
90% is going to do soft.
Yeah.
Okay.
9 times out of 10, you're not really going to see a hard pull, unless again it's one of those larger loans or for like an asset-based product.
I want to read a question. So crazy is I don't know 6. Yeah. Says it seems like a new business with no revenue, like a brand new real estate business, will not get funding.
So as far as like what type of funding would be, again, my question. If you're a brand new real estate business, I would need to know like what kind of real estate. Are we talking like a real estate broker? Are we talking about somebody that's looking to purchase a property that they want to fix and flip? Because again, when you talk about real estate, that's where things do open up a little bit more for you. Example, I just bought 2 investment properties way below the market. I need properties. I need funding for rehab. So I can sell and make profits. Okay. So what I would say in this scenario is depending on that appraisal, right? No offense, but I've heard a lot of people say that their investments have come in under market. And then when they're appraised, it's not what they were necessarily hoping for. So I don't know exactly your scenario, but as long as there's room there, you could potentially utilize funding for your rehab and potentially even pay off any other funding that you took for that for that property, where they'll fund they'll pay off whatever you took to get that property, as well as fund your rehab costs. And then once you sold, you would obviously pay that note off. There's a lot of different stuff available in the real estate world. But what I would say, just to kind of backtrack or kind of flip back and I guess give you the downside of things, is like, if we're strictly talking about giving you cash for your business, you're not going to get access to cash. Like, yes, if you allow somebody to pull the equity out of your property, they'll give you money, but that's at the cost of that equity. If you are simply looking for unsecured cash, you're not going to be able to find it, unfortunately.
Okay. So
Greg,
Rock Financial does do real estate deals.
Yes, we can do
Is
some
that residential, commercial?
So everything that we do is on like the business side. So like if it's an investment property, we can do it, not like your primary residence, right? So even if you're purchasing a fix and flip property, or 1 to 4 unit or multifamily, or whatever, we can help you. We can help you on that as well.
Okay. Let me see if I know. Okay, so Monique said, will you fund the purchase of an investment property that needs rehabbing?
That needs no rehabbing. It says
no
there.
Rehabbing.
I actually just pulled the comments up myself. I didn't know that they were there. So
Oh yeah, okay, yeah.
I'm not the biggest techie in the world, but I can talk.
Neither am I.
I could talk, that's for sure. Great question, Monique. Yes, we totally can. As long as there's the value of that property supports the investment, we totally can. We see products all the time where people are purchasing a scenario where there's already people living in the property, right? There's already tenants in the property. Maybe it's 2, 3, 4 family or multifamily or even mixed use, right? We see it all the time where things are already up and running. We're just simply helping ownership change hands.
Okay. So is there any scenario where you will need to see like tax returns? They have to be in business for 2 years. Maybe their credit have to be 700. What are some of those scenarios? Just depends on what they're looking to get funding for.
So that's a great question. Again, you came locked and loaded. First of all, the SBA, and the reason that I point out the SBA is because they have the longest terms and the cheapest rates. And a lot of times they're going to give you access to the most money. So that's kind of like the big three when you're borrowing, right? Give me the longest term, the cheapest rates, and the most money. Right. So the SBA is the reason that they are able to do that is because they are a government-backed loan, right? So the government guarantees a certain percentage, anywhere between like 50 and 90%, depending on what the weather is outside. They change that, but that's why banks are able to extend you better terms and higher dollar amounts, is because the government is guaranteeing a portion of that loan or that investment on behalf of the bank, right? So because of that, the SBA is one of those scenarios where you're not only appeasing a bank's guidelines, but you are also appeasing the government, right? So the other thing that I want you to be in mind of is it takes you forever to get an SBA loan. So if you are somebody that you're like, hey, I needed this money yesterday or tomorrow, we can't get you an SBA loan. If you're somebody that you're like, hey, I'm purchasing this property, and as long as it happens in the next 6 months, I'm all good, or even 9 months, I'm all good. Or, hey, I'm buying a business, or we're rehabbing our business location, or we're buying another location. These are all ways that you can use SBA funding, but also would take an immense amount of planning that you could do alongside while waiting for your SBA funding.
Oh, so speaking of that really quickly, so we know if you go the SBA route, you're going to be waiting forever. Yep. What's the quickest route as far as to get funding, like the turnaround time? What's the quickest route you seeing as far as a week, maybe 2 weeks? What's the quickest turnaround someone can get funding?
I can actually blend this with the answer to your last question and this question. Our typical turnaround time is anywhere between 12 to 24 hours to get you approved.
Wow. Wow.
And that's from once we've received your information to be able to get you an approval that you can review and say, hey, this works for me, or how much money I need, right? Actually, when we give you an approval, it's in the form of a calculator. So you can say, hey, I want to play with this much money, and these are my terms, and it'll change based on how much money you choose and what your terms are that you pick. So it's a really neat feature, not to brag, but as far as that goes, our typical transaction takes between like 3 and 5 business days on like an unsecured product. And we have the ability to move at the pace of the borrower. So like right now, we're working a deal for 750 to 1.2 million. It's going to end up being somewhere in there. We received the file Thursday night. Right now it's Friday afternoon. We've already have the deal approved up over 1.4 million. And now we're just kind of working out final terms, and it'll be funded by Monday afternoon.
Hey, Tony, is that deal consist of multiple products or just one product?
Just one product. They're looking at a term loan type of option. And what's unique about that is, again, the scenario is the borrower needs the money quickly. So we're able to turn it around quickly. But you also asked a question about when would they need to provide more documentation. So anytime you're looking at getting access to more than like $150,000 or $250,000, they usually are going to start to ask for more documentation. And at least I know for us, we do that on the upfront. So it's less for you on the upfront, right? If we're going to review you for 500,000 or $1 million or $2 million, we want to know that you can actually gain access to it. So we'll tell you, hey, here's what we actually need. And it's not as crazy as like an SBA loan or a bank loan, in that you're going to have to go back 3, maybe 4 or 5 years. Usually we need last year and kind of year to date information, just enough to kind of show us where you've been and where you're going. That's really what it comes down to. So typically you're looking at like a balance sheet, maybe a P&L type of info on like a financial statement side of things. Maybe they'll request some additional bank statements and possibly just last year or 2 years tax returns.
See, this is why I wanted to do a collaboration with Rock Financial and Tony, because for the simple fact, I specialize in helping new business, new LLCs get funding, mainly based off unsecured business credit cards or stated income business credit cards with little to no capital, right? To no revenue in a business. So if you got a good credit score, you've got a good credit profile, personal and business, you can get access to funding. But not everyone has that good credit profile and good credit score. But if you're making revenue in your business, if you have a strong revenue, good deposits, healthy bank account, been in business for it doesn't have to be the 2-year mark. It can be under that, anywhere between 3 to 6 months, I believe. You can still qualify for all these different types of funding, such as equipment loans, term loans, business lines of credit. You got capital. You can get loans or lines of credit for capital, right? Because someone asked Greg, hey, I need money to make money. That's more of a capital loan you would need. So yes, there's different options out there. We mentioned AR, right? Invoice financing. So there's multiple different products and services out there. It's just all about where you are in your business and where you're looking to go in your business. So that's why I really appreciate you guys, because you guys have a plethora of products and services, just depend on that business owner.
Well, that's because we're here for all stages of that business, right? We believe that, that at some point you're going to need bank financing too. We just aren't a bank, so we don't offer that exact type of financing, but everything else we can, and that's why we do. It's not an if, it's a when you're going to need funding. And when you need it, we hope you think of Rock Financial. So that's the that's the idea for us is, we want to be able to service whatever need you kind of have, and be able to do that in unique ways, so that you can benefit from it.
Okay. Now going back to the structure of their business, do you guys really pay attention to that, or are you more so looking at the business checking account? What are some of the things you look at when someone give you their business? Do they need to have an LLC? Can it be a sole proprietary? What is that? What does that look like on your end?
So again, I would lean more towards the business checking account thing. As long as they have a business checking account, that allows us to pop the hood and potentially offer them a solution. The more formal things are within your business, the easier it makes that review process, right? The other thing that I would say is ownership comes to mind here. You know, a lot of banks and lenders want at least like 51% ownership, maybe even more. If you're talking about like the SBA or even some more traditional styles of financing, anybody that owns over 20% of the business has to be on the note. So there's some nuances there. But again, I would say if you're somebody that you have an opportunity, that's when you should look into funding. Don't look into funding without the opportunity. You know what I mean?
Absolutely, absolutely. So piggyback off that, a credit partner. If I bring a credit partner, let's say my credit or my revenue is not in position, and let's say I own 25% of the business. What would that look like? Is that something that you have to check my personal and my checking account too as well, the business checking account? Well, it's going to be together, but would you have to check my personal credit score?
Yeah, so we're gonna do a soft pull on both. Most lenders are gonna want to do a soft pull on both to get to that ownership requirement, right? So if it's 51% or 75%, or you know, some products you gotta like I said, over 20%, you gotta be on the deal. So like whatever the requirement that we have to meet is what the lender is gonna require. So that's what would be reviewed.
Okay, makes sense. But I can bring a credit partner added on to my business to potentially get funding.
Yeah, especially if as long as they own part of the business, yeah, on paper, absolutely.
Perfect. You guys got that? So that's one of the things you can do. If you're not in position, you can bring a credit partner, a CP, on paper to actually get funding for your business. So there's multiple ways to skin the cat. This is what I try to tell my audience. Hey, no matter where you are in your business, you can get qualified for funding. If you're just starting out, maybe you have a business credit profile where you can build up your business credit profile and go get, you can get net 30 accounts, tier accounts, which is, I don't really go that route, but it's a method to my madness because now you can go get a unsecured MasterCard from Sam Club just strictly off your EIN, your business credit profile by itself. Now, on the other end, if you have good personal credit, what you can do is go get an unsecured business credit cards based off your personal credit alone, and you have a properly structured business. You put those two together, now you get funding. On the other hand, if you have revenue, but maybe your personal credit profile is not the best, you can either be a credit partner on, or you can still get funding with a low 550, 600 credit score. Now your terms might not be the best, but you have revenue and you can still get funding. Then as you building that relationship up with like Right Financial or any other bank that you go to, now you can qualify for more funding. So no matter where you are in your business, there's a way. It's all about strategy at the end of the day.
Absolutely, especially if you have a real opportunity, right? If you're going to make money with the money and you can then apply that back to the business and continue to flip it and make money, I would say it's, you know, all about risk versus reward, and no business owner knows, you know, more than that, you know, like that's what it's all about, right? So you know, again, like I said, if I was to just give you one more 30 seconds about us, it would be that, hey, we're here to help business owners make simple decisions when it comes to financing for their business. And the way that we do that is by providing them all of the insight that they need to make the right decisions.
That's awesome. And you guys actually counsel. So it's not just, hey, you got this data point. We're going to get you this. You actually help them and walk them through the process. Hey, this is what you need. This is what we can do for you, and really be there with them. That's why I like Right Financial, because you guys do that. I got plenty of people funding so far through you guys, so it's been a great experience thus far, and I want to work with you guys. That's why I want to do this live. So this is actually my first time meeting Tony. So hey, we all meet Tony in the same light right now. So nothing staged. You know, we didn't even prep for this, so we just came right on, dive right in. Want to give you guys all the information that we can in this amount of time. Anything else, Tony, you would like to add before we conclude this live?
No, just want to say thank you again one more time for having me on. Like you just informed everybody, this was the first time we got a chance to meet and chop it up. So it was great to get a chance to chat with you. I look forward to continuing to do a lot of business. I know Ryan, who's a part of the team, has been super excited to get a chance to work with you. So definitely
great. Ryan been great. Top tier guy, man. He's a top tier guy. Sure.
Yeah, we call him rock stars. He's definitely one of them.
Yeah, for sure. Ryan is great. Guys, so if you're looking for funding in your business, whether it's equipment loan, a term loan, business line of credit, whatever you need, there's a link in the description. Click that link. It will cost you nothing. It's 95% of 99% of the salt pool. So just to see if you qualify, again, it will cost you nothing to see if you can qualify for any type of funding. So you definitely want to. They have a great team over there that they have a lot of credit specialists, a lot of financial specialists. So you guys definitely want to put that link in below. Again, if you need any type of funding, let's get you funding for your business so you can not only start, but to grow and scale at the end of the day. That's what it's about. So guys, appreciate you. Talk to you soon. Have a good one.
Thank you.
All right, gonna end it and end it. Guys, I think I'm still on. Make sure I'm still on. All right, guys, I got a few more minutes. Did you guys have any more questions before I get up out of here? Any more questions? I'll do a little Q&A. This is cool. I'm going to start going live more. This is my first time going live on YouTube. Thank you guys for the support. Thank you for everybody who liked this live, everybody who was on here. This is great. I hope you guys, it was very informative. I hope you learned a lot. No matter where you are in your business, you can absolutely get funding. It just depends on what stage you are in your business. So as I stated before, you might not have revenue, but you have good credit. You might not have the credit, but you have revenue. You might not have the personal credit or the revenue, but you have a good business credit profile. So you need to start somewhere. That's the most important thing, because once you start, it could snowball to different other products and different types of services. All right, guys. So catch you next time, and we'll talk about a different topic, but peace out.